I'm really excited to introduce Joe Anderson, president of Pure Financial, also a certified financial planner. First time to the show. Joe, good to have you, man.
Thanks for having me.
So let's start with, we're going to be growing this show, The American Dream, and we're going to be adding on to it. We're going to be developing a show that stems from the success that you and Al have had on your radio show on KFNB 760, which you guys are, what, Saturday mornings?
Yeah, 10 to 12. We're listening right now, actually.
Yeah.
We're right on 760. I'm in two places at one time.
So stay tuned here. don't go jump in your car and listen to them. So anyway, really cool the success you've had there. It's an honor to have you not only be an expert where we talk about some of the things I do with consumer advocacy, but also to host your very own portion of the show coming up here soon in a couple weeks. But so the market's been on a bull run since March 9th of 2009. That's going to lead a lot of the naysayers to say we're due for a correction. That's going to have some people say, well, there's a strong undertow for a healthy economy, and many are bullish right now.
Well, they're both right.
Okay.
Right? So is there going to be a correction? Sure. Yeah. 2009 to today, so we're at all-time highs in the markets.
Yep.
Right? So you look at the Dow Jones, the NASDAQ, you look at the S&P 500. So here's the comments. It's like, all right, now I'm going into the markets at all-time highs. Do I still stay on the sidelines? Do I get in, look at interest rates? Well, do I go into the bond markets? I can't make any money in bonds. But then I remember, well, wait a minute. Look at 2000 through 2010.
Okay.
That's the worst 10-year history in the market since the Great Depression.
Okay.
You go 2000 through 2002 was the worst bear market we saw since the Great Depression. Remember the dot-coms were now dot-gons?
Yep.
And then you wait a couple of years, and then we have the Great Recession. So if you invest in the S&P 500 over that 10-year time period, you're down 10%.
Got it.
If I start with $1 million, I got $900,000 over a 10-year period. And so the people that are really affected by this are the retirees. Okay, because if you look at generations before, they had the defined benefit plans. So they had the standard pension plans that the employer provided for them.
Yep.
Now you got the baby boomers coming in. 10,000 baby boomers turning 65 every single day for the next 17 to 19 years. And they established the defined contribution plans, the 401ks, the IRAs, the 403bs. Where's all the money? It's sitting in these plans by the baby boomers. And they just got hurt for the last 10 years.
Okay, so do you guys understand why I'm just going to give him his own show? Joe, your wealth of knowledge, no pun intended. Let me ask you this question. So Janet Yellen.
Too much?
No, it's great. We could go all day. And I just have a limited amount of time.
Sure, sorry.
But no, it's great. And people, they learn a lot from you, and they can go to Pure Financial and learn more after today's show, and I hope they do. Janet Yellen, so she's come in that 10-year window you just broke down.
Sure.
There was Bernanke first, and then Janet Yellen. Under Bernanke, we developed a lot of the stimulus, QE1, 2, 3. Now we're in this kind of juggling act between balancing, should we taper so we continue to stimulate the economy? How much does that affect not just the market, but the advice you're giving? I think that's more important.
Well, I think I want to piggyback on what you were saying at the beginning of the shows. You got to control the things you can't control.
Yeah.
Right. And so if you look, all right, we've had a really good bull market over the last, since 2009, the market's doubled, up 200%. A lot of people still haven't gotten into the markets. And then you look at QE1, QE2, Operation Twist, QE3. Most people don't even know what the heck
I love all these vocab words that come up
doesn't make any sense. What they're trying to do, right? They're keeping rates artificially low by buying all these bonds.
Yep.
So it's all supply and demand, right? So if I'm buying bonds, right, so that means there's more supply. So what should that do to the price? Go up,
Price,
and that
yields
should bring
down, right.
the yields go down. So then they started tapering it down, right? 85 billion went to 45 billion. Now I think it's 35 billion. And so you listen to all the pundits and CNBC, MSNBC, and everything else. All these really smart people are saying, all right, well, this tapering, what's going to happen? Interest rates have to spike, right? Yep. That makes common sense to me because, all right, if there's less supply, right?
Yep.
There's a lot less buying. That means the opposite should happen. Bonds should go down. Interest rates should go up.
Inflation a risk?
Well, no, take a look at what has happened since they started tapering.
Inflation
the opposite, right?
Yeah.
Interest rates have not gone down.
Well, the free markets picked them up.
Interest rates have gone down. They not have gone up. So what does that mean? All right, so the Fed's not buying them. So someone must be buying them.
Right, so the marketplace is still in there buying the bonds because the U.S. bond market's safe investment.
Right, because when you see we call it like the cocaine going into the markets with the stimulus.
I use steroids in my drug examples, but if we want to go with cocaine, we can go with cocaine.
I should have used a better terminology there.
Well, I mean, come on, we're baseball season right now.
So if you look at, all right, so then the market freaks out for a very short period of time, and then what happens to the capital? It goes into the bond market, the flight of safety. And so here's the point of the story. So what should people do with markets at all-time highs and then the QE3 maybe tapering down? Nothing. Do absolutely nothing. If you have the appropriate strategy, don't make these rash moves, because then that's where people get hurt.
Yeah, no, I agree with you. And speaking of things that happen in the market that cause rash moves, I want to look at this Bank of America story. Now, we're going to keep you around a little bit later as well in a roundtable to comment on this, but let's go ahead and rehash the story real quick so people are aware of what happened with this $4 billion blunder.
The US government has filed 2 lawsuits against it. They relate to the bank's sale of mortgaged bonds worth around $850 million in 2008. The government says the company knowingly and willfully misled investors about the quality and safety of their investments. It says when the mortgage bonds collapsed, investors lost more than $100 million. The government says it wants justice for those affected. The Bank of America has denied the charges. It's blamed the housing market collapse, saying this caused mortgage loans to default at unprecedented rates. And the bonds.
All right, BBC, British guy. I mean, he needs cocaine. I mean, but so that's a kind of a boring story the way he presented it. But we had a $4 billion blunder that it's been called. Bank of America's stock got hurt. Do you think situations like that create good opportunities? They create good buying opportunities. The media obviously grabs hold of them. Or if you're advising a client, is it just don't pay attention to the noise, stay focused?
Don't trust Wall Street. Right, and so that's the problem too with noise in the media. It gets involved and it gets in people's heads, and they think that they can outtime the markets or outsmart the markets.
Yep.
All the information is already readily available. So, all right, we have this information now. What good is it?
Yeah.
Right? If we knew it before it was announced, that's where you can profit from it. But as soon as the information hits, what happens to the stock price?
So let me ask you this, though.
Yeah.
So you work with, Pure Financial is doing incredible things. You guys are a very successful firm. What are the reactions you get out of your actual clients, the people you talk to right here in San Diego? I mean, do you see these reactions?
No, not on stories like this, because we try to do a very good job of educating our clients. Al and I, Big Al, we've been on the radio for 7 to 8 years, just trying to educate people on not to listen to some of this crazy stuff, where stocks are priced on risk. And so you look at, well, how do you profit in stocks? Well, you take a look at the risk components of those stocks, and then that's how you get a higher expected rate of return. You want to mitigate your costs as much as you can. You want to mitigate the risks and understand or identify what risks you're taking. And of course, you have to mitigate taxes. I think more and more people, as they approach retirement, they will realize that tax is what might be their biggest expense. And because most of the money are sitting in these retirement accounts, every dollar coming out is taxed at ordinary income rates.
Joe, we encourage people to go to craigsewing.com if they have any questions. I'm sure that you've provoked a lot of thoughts today. I'd love to get to a recent financial question we got from last week's show. If we could take a look at that real quick, guys. All right, this came from Jody out of North County. Craig, love the show. Can you explain the difference between a financial plan and estate plan? Want to make sure I'm approaching this properly. Thanks. Joe, what say you? I'll let you answer this one.
Well, I guess a comprehensive financial plan encompasses everything. Yep. So you want to look at like 5 key areas of your financial life. So such as income and cash flow, retirement plans, taxes, investments, and of course your estate plan. A financial plan will take a look and give you the direction and the advice, detailed advice on getting from point A to point B as efficiently as possible.
Yep.
The estate plan itself is a component of an overall financial plan. That's where you hire an estate planning attorney, that they will draft a will, trust, powers of attorney, HIPAA releases, and the like. So both are extremely important, but they're interrelated.
If someone reached out to you and they wanted to get a comprehensive financial plan, and you sat down with them and you identified the fact that they didn't have an estate plan, or maybe you looked at their mortgage and you saw the rate was high. I mean, do you guys create a turnkey solution for all of this? Do you have relationships you can introduce people to?
Yes, of course, right.
Okay.
We don't have anything in-house. We're a fee-only registered investment advisor.
What does that mean?
So the industry's flawed, my friend.
Yeah.
You got commission-based, you got fee-based, and then you have fee-only.
Yep.
Commission is, I'm selling you a product, I generate a commission. No problem with that, as long as it's disclosed. There's a lot of, I guess, lack of transparency, if you will, in the industry.
Yep.
And then they came up with this great phase called fee-based, where I can charge you a fee for advice, but also sell you commissionable products. We try to be on the total opposite side. We want to avoid or eliminate most of the conflicts of interest when it comes to compensation structures. So Craig, if you were coming to my office, I would just charge you a fee for service.
Okay.
So if you're looking at, hey, I'm looking at retiring in the next 5 years. Am I on track? What do I need to do? What are some strategies that I can take a look at? I charge you a fee and come up with a roadmap, and then I help you implement that. Then we charge a fee for managing assets. So picking the right
Good.
investments.
I think a lot of people have questions around that stuff.
Sure.
You know, it's confusing. There's a lot of disclosures. Later, we're going to be talking about Dodd-Frank with you and get your opinion on
that's going to be
You excited
thrilling.
for that? Well, we're
Yes.
going to have Greg Garrison here as an attorney. Joe,
Much
great
better suited,
information.
much better suited.
No, I appreciate you coming in here. Really excited for the extension of the show. Joe is the host of Your Money, Your Wealth on 760 KFNB, president of Pure Financial, and soon to be the host of Your Money, Your Wealth on Cox Channel 4, right behind our show here. So we're really excited to align with him. He is a wealth of knowledge. Visit him at purefinancial.com.